18 September 2023, Monday, MAO with Cal. Now, important US economic data for this MAO video. They're going to be a bit dry, it'll be a bit of texting, but I can tell you this, these are all very important data that you need to watch because September selling wave is actually starting right now. And last Friday, I've been warning people that there will be selling, and truth be told, those who follow my MAO has profited from it handsomely. So let me tell you more details. Let's go. All right. Very important is disclaimer apply as usual, and thank you Ames for the kind sponsorship. Now, Janet Yellen is feeling very good. Apparently, she's feeling good about a soft landing for US economy. So the thing is this, many experts, analysts are all calling for soft landing. But the thing is this is the same lady who was telling people that the inflation is transitory and things didn't really materialize. And I can tell you this right now, she's feel that it's the same pathway of a soft landing. But if you realize this, US has never went through soft landing. It's always the money that propel or recovered the market. In fact, itself, right, I believe that she's going to be absolutely wrong once again. Now, if everything is fine, then why the banks are cutting jobs? Now, look at it. The largest US bank that hired more than 100,000 more people over the past 3 years are now cutting jobs. Now, 3 years ago, they cut jobs, we understand, it's due to COVID. But now we have recovered, right? We are like 5% away from the all-time high, and things are going well. And if it's going to be like soft landing, why are we worried? So the thing is this right now, thousands of bank employees from Goldman Sachs and Morgan Stanley, now these are the big boys, and they are affected by jobs cuts, all right? This is serious. Now, I plan to cut about 4,000 positions and more to go. So again, don't you realize this is the same thing repeating what happened back in this 2008? It is just repeating. So US bank trust plans has sizable job cuts to save $300 million in costs. And of course, you have New York City Bank, Citigroup. They're going to cut people from the back office functions. All right, this is not a joke here, guys. Things is getting very out of hand. And if you remember this, I was telling you guys that Biden economy is failing. And I remember telling you this, that the S&P 500 will likely be selling based on a 72 years historical pattern, and this could happen as early as today. So you really need to be very careful, because last Friday we saw the Dow Jones lost 300 points, Nasdaq and S&P lost the second straight week of losses. This is not a joking matter. In fact, it's all right. The University of Michigan consumer sentiment has shown 1 year inflation had dropped to 3.1, right? But now it's back up again. So the thing is this, people are lying to themselves. They know the numbers are going up, the inflation figures are going up, but because they just concentrate on the cost CPI, but it doesn't help. And if let's say crude oil price start to go higher, energy price goes higher, this will really hit across the board. And this is not going to be a joking matter. All right, so traders, you need to be really careful. And that's the reason why we call for short on Friday. And based on the indicator itself, we shorted right here itself. Let me bring it to you. We shorted somewhere around here. There was a very good trade over here. We shorted, we added position right here itself. Yes, we added position. And the market kept on going down all the way, and we profited more than $1,000 from trading. And you can see that one single trade itself, $791 US. This is real trading, and our risk to reward management is 1:5, and it's something that you really want to consider joining us. All right. So you can see right now, Morgan Stanley, Mike Wilson again warns too much optimism in US stock prices. And he believes that the rebound in economic growth is not going to likely be happening in 2023. Now, this is the latest one since 5th of September. And in fact, it's right, more experts like this Barry Bannister, he feels that, right, the forecast of the stock market being an uber bull is totally wrong. He believed that in numbers. So based on the S&P operating EPS consensus, he believes that right now we are really overdone. Now the market is looking at 228, but in actual fact, in its own calculation of 213. And in fact, you look at 30 years EPS trend growth, which on an average that was 205. So in this matter, that means that we are about probably 5% overvalued. All right, this is what coming from Barry Bannister. And of course, based on the September third week, you can see it on the third week itself, usually there will be selling on the third week. So guys, this is no joking matter, because usually the week before is more positive. The third week, there should be some selling and then some rebound later on. So traders overall itself, the third week of September, which is this today, Monday to this coming Friday, this is not good. So traders, you need to be very careful. One thing to note itself, guys, You can look at the Dow right now. It has lost below the MA30 yesterday. Now, what is happening? Because there's this UAW strike going on. There's a lot of auto workers are doing strike right now, about 146,000. Now, think about this. If they go for strike for 10 days or more, this has spilled over to the unemployment side. And do you notice this? We did say that a few weeks ago, that usually when inflation is creeping up, unemployment will also go up at the same time. And there is a cocktail for selling. And things is just happening by its own. So if you look at it right now, the upside potential is about 35,600. That means that if the S&P, Dow Jones will go higher, it'll be this point here at 35,600. But if the market continue to fall, we may even see 32,500. Now think about this. The downside itself is as much as 2,000 points. This is really insane. 2,000 points versus the upside itself probably is about 1,000. So guys, think about this. We're going to see something devastating on coming in right now. And of course, you look at it more, you can see down this way, get a bit dry, but it's very important. This is the industry production index. And you can see in blue, it's coming down, as you can see. And the Wilshire 5,000 price index is going up. Well, when you see such a thing itself, usually it doesn't make sense, right? But you look at it, whenever this coming down, the blue line comes in, the red line goes up itself. That is whereby people thought things is good. But then later on, if they both of them have to go down together, that's where things get very, very bad. And of course, look at this right now. If you compare the initial claims, it's even clearer. Every time when the production indexes goes down, you can see that is where the moving average of the initial claims goes up. Now, initial claims goes up is not a good sign, and this is actually happening right now. You can see the production index, industrial production is now below the zero marker, and the average claims and initial claims are going up. So all these speak for itself, and traders, this is no joking matter because the banks are now tightening. Now look at it, the way the bank tightened all the way from 2022 all the way to today. Now you're very near to 2020, 2008 and 2001 level. We are just around the corner, and this is not a drill, because when this happens itself, and if the numbers, which is the industrial production itself, is at a low end, you can see that this will usually lead to a form of recession. So again, all these numbers are actually repeating and repeating, guys. You cannot walk away from this recession. And of course, you look at this, the 10-year, this 10 and a 2-year spread, you can see right now it's now still inverted, and it's really coming down based on the consumer price index is coming down. Now, usually when this happens, let me just show to you guys, it's very important. When the yield inversion comes in, you can see that that is where you can see that the CPI data comes down. But later on, when the thing goes back up again, that is whereby we enter recession. So this happened again before, and it's happening again previous time in 1990. So that's why I believe that this one is going to pop up soon, and this will likely have a temporary reprieve before kneeling up again. So traders, you need to watch out for this, because I believe the CPI data will go back up to 4.0 again. And of course, if you look at the 10-year and 2-year spread again versus the initial claims, you can see right now it is doing the same thing exactly. And traders, you need to be very careful. Now, one thing to note, this is a very important chart. I believe there's a technical mistake here. Just give me a short moment to just do this proper. Okay, just give me a minute. Okay, this is very important. You need to watch this yourself. All right, guys, this is serious. Let me just give me a moment. Okay, now take a look, guys. This is the retail sales. Now, retail sales climbed for the 5th month in a row, but mostly due to the higher gas prices. So the retail sales went up, not really because of the merchandise, which you can obviously the mainstream media is not going to cover that. But something to note itself is that this is the S&P bullish percent index, and you can see that right now we have a reprieve on Thursday, which is like here itself, which happened before on the Thursday. And then after that, the market goes down, turns up again, and collapse later, like capitulation. You see this happen before. So that's why I believe that this Monday itself, this index is going to pull. And of course, if you look at this from this chart here, if you look at this one more chart, this is crazy. You can see right now the 10 years to 3 months, the spread itself, this is very clear. We are at a very, very high level. The probability for US recession predicted by the Treasury spread. Now, whenever Treasury spreads actually picks up, you can see over the last, 1961 until now, every time when it picks up to around this level here, we will actually have a recession. So, I mean, seriously, this is what happened in 1971. This happened in 1974. 1979, it happened again in 1990, happened in 92,000 and 2008. Now, all these are really time whereby we all know that the stock market pulls back pretty badly, between 20% to 40% to as much as 50%. So the question is this right now, we are actually back to the level what happened in 1974, whereby the recession lasts for 1.5 years. So how can you tell me that this is not going to be a recession coming in? That's why we have to be careful, because things is going to go really bad. And of course, unless again, Jerome Powell and friends want to pump in money, if not, this may not go well. So take a look at this Friday, this coming Monday today. This is the NASDAQ right now. The NASDAQ is now trading, really holding the MA30 very, very closely. You can see the way it closes exactly on the MA30. And due to the trending factor here as well, we can see a very long trend line since this March period. So we are very close to this trend. If the market breaks below the trend, which I think it will, there will be selling coming in, and traders, you need to watch out for this. Now that is a NASDAQ. If you look at this right now on the NVIDIA, you can see I warned many people not to buy NVIDIA. When it recovers back here as well, I said this is going to be a bull trap, because you can see the price went up, but the volume came down. This is a very typical pump and dump exercise. And you can see right now, the selling's coming in. There's no huge volume, so the selling is steadily. So many people are buying, but the guys are selling it steadily. So once the market breaks 430, I believe that the next level will be coming out at 405. And once it hit 405, for people who want to buy cheap, you're buying approximately nearly 20% from the high. So you can consider that. For me itself, I'll be watching this number. Who knows I'll be buying, but doesn't matter. The main important thing is this 405 didn't fit coming down. So traders, you need to go very slow on this. All right. So like, subscribe, and share my video. This is Kel signing off. Take care and have a great day ahead. Bye-bye.